So let's see what happened in the stock market this week as we look at our 60-minute chart of the S&P 500. And can you see a trend in here? Wow, look at that. As the market accelerates down, here we are late in the day looking with only about 90 minutes left to go in the session. And the S&P 500 is now down 51 points on the futures. That is the ES, and you can see this big acceleration to the downside in here. This all really started here on Monday. You can see that Apple news came out that they halved their production of iPhone X, and that started to lead stuff down overnight. But then what happened was that on Friday, it turns out their iPhone X sales were, well, not as bad as they expected. 30-year bonds, they started to get hit. They were down a point on oversupply concerns. And believe me, with the government needing to borrow that much money that they need to, and, you know, it's probably 600 billion plus every year, moving up to $1 trillion and more in coming years, then that's why these bonds are under such pressure. So the market started to go down there on Monday, and you could see what happened as it accelerates to the downside here on Friday. Here, world markets were lower. China started to go down about 1%. China had a really bad week. Also, oil was down on supply concerns, $1.25, and the healthcare got crushed in here as Amazon and J.P. Morgan and Berkshire Hathaway formed their own healthcare company. We saw a lot of pressure on healthcare and drugs, especially after POTUS came out and said he wants to push down drug prices. So we had this big decline, came right over here on Tuesday. Home prices had a big upside surge. There's some more inflation right there, the most since 2014. And here you could see we had this down day here. It wasn't really a horrible down day. It was bouncing around here on Tuesday. Wednesday, ADP came out up 234,000. That was stronger than expected. Employment costs up. You could see there 0.6% for the quarter, 2.6% year over year. And here you could see we had this down day over here on Wednesday. Facebook comes out and they had a huge swings, like down $7, up $5 when their earnings came out. And the earnings were big, and that helped the market rally in here overnight. On Thursday, then it started to come down again, and techs started to give it up right over here despite that Facebook bounce that we saw in there. So again, market tries to put on a rally here, holds steady here on Thursday after giving up its early gains, and then overnight we get this liquidity scare in China. Investors start to sell. Payrolls came out hot that you could see right over here, and the bonds started to dive again. They lose over 3 points in the last 2 days. The dollar pops, has a really good upside day, and then that memo comes out right over here where they talk about potential spying abuses. And look what the market does. It falls about another 30 points after that. So tell me, are they just piling on as the sellers get worried, or are they worried about this memo? You can just see that that had a pretty good effect on the market as since that memo was released, there was a very big acceleration to the downside. So obviously means something, and this is a very, very large down day. As a matter of fact, right now for the week, the S&P 500, Dow Jones Industrial Average, NASDAQ, all over 3% declines for the week. Who said we could never get another 3% decline? We're also nearing 5% on the downside. Now we're going to look at the stock market. The stock market has finally turned down in a significant way, and this tone change has really got to have some of the people that haven't been around for a long time really wondering, wow, I thought that they abolished these kind of moves. So the what we're looking at in here is a potential move to the downside of some interesting scenarios of how that's going to shape up. I don't normally do this, but we have a market that is much different than we've seen before. And what I wanted you to see is are the scenarios based on the type of market that we've been in. So we've been in the kind of market that has been in every one of the cycle patterns being positive to the upside, big upside moves, minor declines, this upward chop going on that you could see right in here. It's been very significant. Now something is changing. And this is now 21 days off the last low, which we have not seen happen. That is it's screaming that something has changed. So what I did was I put in the 3 scenarios based on, well, if the old patterns continue, this is basically what would have happened. But we don't believe that's true because we think that the intermediate pattern is rolling over and pushing on it. This would be the type of pattern that we would expect, the most likely scenario, based on getting a pretty good bounce into this minor resistance zone, and then after that rolling over and declining again, continuing the correction. That's the most likely scenario. And if that's right, then we would probably see the market rally up to this area of about 26.16 or so, a little bit higher, and then roll over after that. That would be the most likely scenario based on what we're seeing. However, because this cycle has now gone to 21 days, you could see the potential that the low that we were looking for here is actually right over here. And this scenario could be the one that's playing out. And this is free fall scenario. As the cycle lengthen out, then the more days without a rally indicates that this is the right pattern. If we go to 22 or 23 days off of this low, it's going to mean this is the correct one and that we're in a free fall. And the way the market looks today with the S&Ps down 60 points, I mean, this is what free fall looks like. So this is a very bad scenario that we're looking at. I would normally say that this would be the most likely scenario, but this is how it's resolving right now. Another day or so on the downside, and man, this is going to be a really bad scenario. And that 10% correction plus could really be in the works right now. And we don't expect the low to come until May. This could just be the very beginning of it. So this is a bad scenario. We're going to look for attempted bounces this week. If the market is just normal, it gets up 28.16. That's, I'm telling you, feeling less and less likely as I see this scenario play out. Both of these scenarios are bearish that you can see right in here. One is just more bearish than the other. A bounce in here that takes you up to here and then rolls over significantly, or that this is the whole bounce and it just fails every time it tries to rally and moves down very sharply. That's the 2 scenarios that I think are in hand and very negative when we look at that. The NASDAQ, the next index we'll look at in here, is I didn't quite put it in all 3 scenarios. I put in what would be the previous bullish scenario and this, which seems like it's the more likely scenario. But again, the scenario could very well be that this is all the rally and this is the decline we're looking at, and we're going to know that in the next couple of days. This right over here, let me just activate that. That's day 20 coming on the downside. And that cycle lengthening is a very negative factor. Really, this could be a very bad scenario coming to much, much lower levels. So again, we think that the signs are that a very significant correction is at hand. Russell already had given up a lot of ground, over 6% now, I believe it is. And again, this would be the normal scenario, but we think it's going to be somewhat worse than that. So showed you multiple scenarios, and that's looking to me like the start of some real trouble in the stock market. There's going to be some days coming up where it looks like there's relief, like, okay, it's over with. I wouldn't believe them. I really think that we're in a period of a lot of trouble for the stock market, and you don't get 60-point down days unless there's something pretty significant going on in the stock market in a very negative way. I had done a video on the VIX, essentially saying that I thought we were coming into a scenario in the VIX where we were about to get a big upside move. I want you to go to my videos and tools for text and look at that video that I did recently on the VIX that said that we were about to get a big upside move in the VIX. And the chart that I showed was this. I'll just give you a peek at it, and you could see that these are the cycle scenarios that called for the VIX spike in here, and the VIX is up to 1768 right now, having come from under 9. Well, that was the complacency that we saw in the market, and that period has ended. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel, and also go to askSlim.com and become a level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them. I've been